All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Wednesday, everybody. Today's April 30th, 2025. Happy GDP Day. Happy Recession Day. Happy Stagflation Day. The stag and the inflation starting to show. Not quite. We still don't have the high unemployment, but the unemployment is artificially elevated, or the unemployment is artificially low because underemployment is hiding in a lot of those stats. And look, guys, we just got a bunch of economic data this morning, and let's just call a spade a spade. None of it is good. The data is finally saying what we've all been seeing, feeling, living for the last few years. And the market is finally responding to that data in the way that it should, because, well, bad news is bad news again. We've got a Federal Reserve that is not going to ride to the rescue. The Fed is not going to do anything that might be perceived as helping Donald Trump win a trade war. And so if the Fed's going to keep doing nothing and we get bad news, it means market starts heading lower. And we saw that this morning, first with that GDP data that came out. Negative 0.3% economic growth for the first quarter of 2025. That is our first negative print in GDP since the first quarter of 2022. You remember back when we arbitrarily changed the definition of a recession for largely political reasons, and the Federal Reserve, the independent Federal Reserve, even went along with that ridiculous, stupid talking point, laughably? Well, yeah, we're back there. Negative growth. It's been driven mostly by a big surge of imports. We had a lot of retailers were front-running tariffs. We knew the tariffs were coming. We didn't know how bad they were going to be. They were nuts. Liberation Day was a shock to everybody. But we did have a lot of people getting out in front of those tariffs, buying more inventory. Well, imports is negative on GDP, so a big surge of imports looks like negative economic activity. We also had a lot of people bringing gold into the country in the first quarter. Remember, all the gold was leaving London, and remember that story about the lorry in the bullion yard? Yeah, remember that whole nonsense? Well, that actually subtracted from GDP because gold imports counts as negative economic activity. Now, that gold, the flow of gold has actually reversed now. It's heading back to London, so that's going to somewhat undo that. Those two different lines, the gold-adjusted GDP on the Atlanta Fed's GDP Now tool versus the regular one, we're going to see those lines converge as the flow of gold reverses. We also had a big drop in government spending. That's interesting. It was actually a 5.1% decline in federal government spending in the first quarter. So look, Doge, there was a lot of headlines about it. There was a lot of talk about it. And then the judges kind of reversed a lot of that stuff. And then, oh yeah, we promised trillions in cuts and we got paltry amounts. We didn't cut anything. Maybe they even spent more money. Well, it looks like they did achieve some savings. It was modest, 5.1%. But holy crap, I'll take what I can get. Government spending went down. Mark the date and time. It is humanly possible to see negative federal government spending. You've seen it here. Hey, how about a little more? We got 5%. How about another 5% next quarter? Don't threaten me with a good time. We also had slower growth in consumer spending, 1.8%. Consumer spending went up, but it went up less than it went up last quarter. So the consumer showing a little bit of signs of stress there. Big surge in fixed income investment. I think data center construction probably contributing to that, the AI bubble. We got PCE inflation today, 3.6%, higher than expected. There's your inflation. Slower economic growth, negative economic growth, yet higher prices. That Keynesian boogeyman that ain't supposed to exist, there it is. And on top of that, we got ADP private payrolls this morning, 62,000 jobs gained. That is versus 115,000 expected and way down from 147,000 last March. So we got weak jobs data to go along with the JOLTS report from yesterday showing a big decline in job openings, partially offset by a rather unexplainable surge in job quits in the first quarter or in the month of April. Look, guys, this data, I mean, I'll just flat out say it, it sucks. Right? Slower economic growth, fewer jobs added, inflation higher than expected. It's pretty bad. And the market is responding in a commensurate fashion this morning. We also got a whole bunch of earnings reports. This is interesting. Super microcomputer, huge miss on super microcomputer. As I said on Twitter yesterday, bless me, auditor, for I have sinned. It has been 2 months since my last accounting fraud. Huge miss on earnings. They're saying delayed customer platform decisions is behind the big drop in their earnings. Delayed customer platform decisions. That's a funny way of saying our customers ain't spending money on us. But other than that, our business is firing on all cylinders, doing really good. Okay, Supermicro, congratulations to Supermicro shareholders. You had it coming. That's all I could say. If there's a company I love to rag on, it would be Supermicro Computer. They are the most blatant fraud in the entire market. The NASDAQ, in my opinion, is grossly negligent by not delisting that company when they should have, just because they hired BDO, an accounting firm with a horrible reputation, to come in and bless off their books without really looking at them, all while saying material weaknesses and you can't trust anything this company says. It was all in that 10K that the auditor somehow signed off on. Yeah, couldn't have happened to a nicer bunch of guys. Caterpillar earnings down big year over year, but Caterpillar stock is actually doing all right here because they're projecting a lesser impact from tariffs than a lot of people thought they were going to see. Caterpillar does a lot of business in China, but Caterpillar makes the stuff that they make where they sell it, right? They don't ship excavators around the world on boats. They build excavators in China and sell them in China. They build them in America and sell them in America. So if your equipment's not crossing those invisible lines, you're not really subject to tariffs unless the Chinese government decides to target an American company, which actually could happen. But for now, CAT is projecting a lesser impact from tariffs. The market is liking that despite a really bad earnings report. Yum Brands is showing weaker than expected performance from American restaurants. There's your struggling U.S. consumer. Stellantis and Volkswagen both out with bad news this morning. The auto market is in big trouble here. Both of them are pulling their guidance, anticipating a big impact from tariffs. Although there was a little bit of a rollback in tariffs for the auto sector yesterday. President Trump issued another executive order avoiding the stacking of tariffs. You know, we don't want to have tariffs on parts, on cars, and on steel and aluminum, all affecting the same product. So the auto industry did get a little bit of a reprieve yesterday, but still the autos are going to be hit pretty hard by tariffs. And we actually got some movement in the Ukraine today. This is interesting. The rare earths deal appears to be very close to being signed here. Trump made some pretty major concessions versus what he was asking for. The Ukrainians have made some concessions. It looks like the Chinese outright refusing to sell rare earth metals to the United States may have jarred something loose at the negotiating table, made Trump a little bit more willing to compromise. And, well, it looks like military aid to Ukraine may be coming back in exchange for those rare earths that the Chinese won't sell us. Kind of a case of for every action, there is an equal and opposite reaction. We're actually seeing the Europeans start to cozy up to the Chinese a little bit here in the negotiations. So the whole global order is in flux, and I think that's to put it mildly. Guys, we got a lot to talk about today. Why don't we shrink my big million overhead and let's see what's going on in the markets. And if you please, for all you new guys out there, hit that like button and that subscribe button while we're here, because we do this every day. So come on back tomorrow and have your coffee with the melon heads. Right now, the S&P 500 is down 80 points, 1.5% lower and falling here. All of this decline really started around 8:30. Well, I guess we were on our way lower. Looks like here for the first 10 minutes, somebody got a peek at that GDP number before it actually hit. And then when it hit, the market just took a bath here, down 1.4%. The Dow looking about the same here, down 346 points, 0.86% lower, largely because of that GDP report. And the NASDAQ is leading the way lower here, down 1.94%, 380 points in the red this morning for the tech-heavy NASDAQ. Stocks are down pretty much across the board here. Meanwhile, we've got a slightly stronger dollar yet again, 99.45. That's up by 24 basis points. Watch that 100 level. We're seeing the dollar creep back up. Maybe we're going to retest that 100 level, possibly see what happens there. Something worth keeping an eye on. And the bond market. We've got things are moving around in the bond market. No big moves, but everything was red. All the yields were lower, meaning bond prices were higher, right up until we got that GDP report. And then we saw yields start to move to the upside a little bit. That's interesting here. 30-year Treasury, 4.667. That's higher by almost 2 points. The 10 years at 4.177, a fraction of a point higher. It was a few basis points lower at one point this morning. The 2-year, meanwhile, still negative, down 2 points at 3.638. And the 1 month is at 4.307. That's off by a fraction of a point. Looking over at the commodities board this morning, we've got gold is off the lows of the morning, but down once again, $3,306. That's lower by $9.70 or 0.29% lower. We were as low as 3,267 at one point today. So gold was looking pretty bad. It's now getting a little bit of a recovery here. Maybe some of that safe haven money hiding out in gold here is bringing it back towards even this morning. Silver, meanwhile, having a rough morning, 32.71, but also off its lows. It was as low as 32.18 for spot silver at one point this morning, but it's still down 22 cents or about 2/3%. Also, I would note, look at that front month May contract for silver, 32.63. That is 64 cents lower. We're seeing a much bigger move in the front month contract versus spot here. That's kind of interesting. Still a little bit of contango here where the spot price is higher than the 1 month out, but keep an eye on the lopsided moves there. Looking over at copper, we've got 6% lower on copper. That's $4.57. Big move lower, and that is straight up feeding off of that GDP report. Copper is, they say, Dr. Copper, a pretty good indicator of economic health. And well, when the U.S. GDP is declining, that doesn't say good things about the state of the global economy. And copper is down big this morning. Platinum down 1.3%. Palladium down about 0.85%. And oil is down another 1%. Look at this, 59.77 for WTI crude. Guys, oil has got a 5 handle. Once again, take a look at this chart. Daily candles for WTI crude oil. This is going back to about October of last year. Look, we had Liberation Day on April 2nd. The price of oil tanked on global recession fears. Then on April 9th, when Donald Trump acquiesced to the bond market, oil saw a sharp recovery, moved a little bit higher, but now here we are moving lower again. It looks like we're going to retest those lows from April 9th here. Look, the Saudis have been pushing for more oil supply. Doomberg mentioned this in our interview that we did a couple of days ago, that something very profound happened a day after Liberation Day. Now, look, it was, if you actually look here, if we zoom in, this is Liberation Day on the 2nd. And yes, oil did fall, but the big fall actually came on the 3rd and the 4th. And that was after Liberation Day when the Saudis and OPEC Plus announced a 3 times bigger than expected increase in oil production. And now here they are in the last few days calling for another big increase in oil production just a few days later. Something profound happened. Doomberg really zeroed in on this and said it was probably pretty significant, even saying we'll probably read about it in the history books someday. He said some kind of big deal was cut with the Saudis where they increased oil supply. Doomberg speculated that it had something to do with allowing the price of gold to run higher, and we have seen the price of gold run higher since then. And the Saudis own a lot of gold, maybe some weapons contracts involved there. We've seen the U.S. is going to offer a $100 billion weapons package to the Saudis. Whatever it was, whatever happened following Liberation Day, whatever deal was cut with the Saudis was very important, and it means lower oil prices, which is something President Trump campaigned on, something that he really wants. So keep an eye on that oil market as well. Meanwhile, we've got Bitcoin is a little bit higher than this point yesterday, not by much, $94,415. That's up by about $144. We were over 95,000 before that GDP print hit. That is taking Bitcoin down a little bit this morning. Also, this is a pretty important one, guys. On the trade war front, the international geopolitical front, Ukraine is ready to sign. Emphasis, ready to sign. They haven't signed anything. Let's give them a chance to mess this up because they probably might. But right now, it looks like the deal is made, and they just need to sign for a U.S. resources deal as early as Wednesday. That'd be today. As long as everybody's able to keep their mouths shut in front of the cameras, maybe this deal actually happens this time. Right now, Ukraine is ready to sign a natural resources deal with the U.S., a person familiar with the matter said, in a move that could bolster Washington's support for Kyiv by strengthening their economic partnership. The draft agreement, which envisages creating a joint fund to manage Ukraine's investment projects, has been finalized and may be signed as soon as Wednesday, the person said, speaking on condition of anonymity because the talks are private. Ukrainian economy minister, don't make me pronounce it, we'll just say Yulia, is on her way to Washington for the signing, they said. As part of the agreement, the U.S. and Ukraine will seek to create the conditions to increase investment in mining energy and related technology in Ukraine, according to drafts of the document seen by Bloomberg News. Washington also acknowledges Kyiv's intention for the deal to avoid any conflict with its plans to join the European Union, long seen as a red line for Ukraine in the talks. In another breakthrough, the U.S. has agreed that only future military assistance it may provide Ukraine following the signing of the deal would count towards its contribution to the fund, according to the document. Ukrainian Prime Minister, something else I can't pronounce, said on Sunday that Washington had dropped its insistence on the inclusion of the deal of tens of billions of dollars in aid delivered since the start of the Russian invasion. So right here, you can see how the Chinese refusal to sell rare earths to the United States has moved President Trump towards the center, more willing to compromise on this. Trump had insisted that everything we've given Ukraine already count towards these rare earths that we're going to get in exchange for military aid. Basically saying that wasn't a donation, that was payment up front for something to be named later. The Ukrainians didn't want to do that. Well, it seems Trump has backed away from that position, and now they're saying any future military assistance we provide is not a donation. We are buying rare earths from you. And so it looks like the U.S. would finally get something for all this equipment that we're sending there, but again, get nothing for what we've already sent. Now, again, I would emphasize this deal has not been signed. We've been close to signing a deal like this before, and then we got that February blow up in the Oval Office. But this is a significant event here. And also, the European Parliament president, this is on Financial Juice this morning, expected to announce Wednesday that China decided to lift sanctions on 5 current and former members of European Parliament. So while the U.S. and Ukraine are playing a little bit nicer in the sandbox, now you've got the Europeans cozying up to China here. Obviously, everybody being in the crosshairs of Donald Trump and the trade war is probably contributing to this friendly gesture between the Chinese and the Europeans. Do the Europeans hate Donald Trump more than they fear the Chinese? Maybe. Seems that way based on what we're seeing here. The Chinese making this overture, obviously hoping to secure some kind of deal with the Europeans to offset the loss of U.S. markets. Now, what's going on in the GDP report today? Check this one out. The U.S. economy contracted at an annualized rate of 0.3% in the first quarter of 2025, marking the first decline since the first quarter of 2022. This was a sharp reversal from 2.4% growth in the previous quarter and came in below market expectations of 0.3% growth. I don't think anybody was really expecting growth in the first quarter, to be honest with you. A 41.3% surge in imports contributed to the slowdown. That is the front running of tariffs, the buying of gold, as businesses and consumers rush to stockpile goods in anticipation of higher costs following a series of tariff announcements by the Trump administration. Consumer spending also cooled. Consumer spending growth cooled, I should say. Spending was up, but it was up less than last quarter, 1.8% higher. That's the slowest pace since the second quarter of 2023, while federal government expenditures fell 5.1%. And I feel like the market's going to glance over that, but I think that's important. The federal government spent less money. Hellfire, it is possible. Hallelujah. Holy shit. Pass the Tylenol, all that Clark Griswold stuff. Federal government spending actually went down. I just love it. That is the steepest drop since the first quarter of 2021. In contrast, we had fixed investment surged by 7.8%. I believe that is data center construction resulting in that growth in fixed investment. But here you can see the GDP numbers. There's your negative 0.3%. That is the first contraction in a while. Let's set this to 10 years and you can see it. There you go. The first contraction since the first quarter of 2022, when we defined our way out of a recession. And before that, we had that mini recession due to COVID that was, of course, snuffed out only by a fire hose of printed money, which is largely what got us into the mess that we currently find ourselves in. We also got inflation readings today. Personal consumption expenditures, the Fed's preferred measure of inflation. PCE prices Q over Q in the United States increased 3.6% in the first quarter of 2025. That's up from 2.4% in the fourth quarter, and that is also higher than expected. Look, inflation, there you go. 3 consecutive quarters of rising inflation, 3.6%. That is the highest we've seen since the first quarter of 2023. So I showed you the stag, slowing economic growth. I showed you the inflation, higher PCE. What about jobs? To get full-on stagflation, you have to have economic decline, high inflation, and higher unemployment. Well, we don't have that yet, but we did get some pretty weak labor data. ADP private payrolls just came out this morning. Private businesses in the U.S. hired 62,000 workers in April. That's compared to 147,000 that were hired in March. So a big decline in private payrolls growth. And the number still went up, mind you. That's also a lot less than expected. The market was expecting 115,000. So you can see it here on this chart, guys. Slowing growth in ADP private payrolls. This is the lowest number since July of last year. Let's look at a 10-year chart here. Well, COVID kind of messes with that. It makes the chart unreadable. So not a lot you can draw from that. If we look at maybe a 5-year chart, again, COVID kind of messes it up. But private payrolls not growing like they were expected to. We also got job openings data yesterday. The JOLTS report, that was showing weakness in the labor market. Job openings in the U.S. fell by 288,000 to 7.192 million in March. That's the lowest in 6 months and well below market expectations for 7.48 million. A lot less job openings than there were a month ago. Now, this chart doesn't really tell us a lot, but let's look at a 5-year chart. Now you can kind of see the decline in job openings, right? This strong and resilient labor market that these muckety-mucks at the Fed and the Treasury have been talking about for how many years? Look at the number of job openings in America declining. There's your strong labor market. All right. You know what you can do with your strong labor market. The strong labor market is BS, guys. Case in point, real wages are not going up. Our standard of living is going down. The cost of everything else is rising faster than our wages are. And on top of that, our hours are getting cut. And it's a fact of the matter, guys. If we had a strong labor market, then the cost of labor would not be going down relative to everything else. This has been one of the biggest lies that the ruling elitist class of the country, the world, has been pushing on us for years now, this BS narrative of the strong labor market. Although now there's a Republican in the White House, so maybe they'll finally stop with that BS and admit what the labor market actually looks like, because it suddenly suits their narrative, you know, the independent Fed, all that stuff. Look at the decline since the beginning of 2022, since March of 2022, the very day the Fed started tightening for the first time, job openings have been in decline and they haven't looked back ever since. Now, we did get one bit of silver lining to this big gray cloud of economic and labor data. That was job quits. Typically, job quits, people voluntarily leaving their job, is viewed as a bullish indicator for the job market because people leave their jobs when they think they can get another one or a better one. And the number of quits in the U.S. rose by 82,000 to 3.332 million in March. That is the highest in 8 months. So that's showing a little bit of strength in the labor market. Emphasis a little bit. Again, let's zoom out on a 5-year chart, though. Okay, we've got a little bit of a blip here over these last few months. But again, this was known as the Great Resignation following COVID, when everybody quit their jobs to work from home or to just spend stimmy cash and collect unemployment benefits. And then ever since March of 2022, ever since the Fed started tightening, we've seen quits has been in sharp decline. Now we have gotten a little bit of a bump over the last few months. We'll see if that corrects or if that continues. But that's a little bit of a silver lining in the labor market. All right, let's talk about earnings reports now. We got a lot of earnings data in the last few days, starting with one of my favorite companies, those lovable, adorable crooks over at Supermicro. The stock is on track for its worst day since February. Here's why. SMCI stock was falling sharply Wednesday after the artificial intelligence server maker said earnings for its third quarter will likely fall far below what Wall Street was expecting. Shares plummeted 17% in pre-market trading Wednesday. If losses hold into ordinary trading, the stock will open around $30. It would be the largest one-day drop since February 27th. SMCI said it expects revenue for the March quarter to be between $4.5 and $4.6 billion. That's down from estimates of $5 to $6 billion. That is a huge decline in their projections for earnings here. They're also calling for earnings of 29 to 31 cents adjusted from what used to be 53 to 60 cents. The company attributed the shortfall to delayed customer platform decisions. Yeah, our business is great, except our customers aren't spending money. Other than that, everything's good. Supermicro servers often house NVIDIA chips. That suggests the issue could be around the transition between NVIDIA's older Hopper hardware and its new Blackwell processors, with customers waiting to install the newest chips. Or maybe it has something to do with all these headlines about Microsoft and Amazon canceling their plans for data centers. They don't need to order Supermicro servers if that's what they're really doing. The market has been in blissful denial about those headlines for several months now. I don't know what it's going to take for these people to believe what their eyes and ears are telling them. But for now, Supermicro computer stock is lower by 19%, $29.16. That's off by $6.84 this morning. Couldn't happen to a nicer bunch of guys. All right, let's talk about some other earnings that we got this morning. Check out Caterpillar stock. It sees a boost the Dow Jones on news about Trump's tariff impact. This is an IBD this morning. Caterpillar, a bellwether for the global economy, posted bigger than expected declines in first quarter earnings and revenue on Wednesday. Cat's earnings were really bad here. But the Dow construction and mining equipment giant traded slightly higher in stock market action. So what is going on here? For the first quarter, Caterpillar earnings slid 24% to $4.25. Revenue fell 10% year over year to $14.2 billion. Terrible numbers. But Caterpillar said that sales fell due to $1.1 billion in lower volume, $250 million in lower pricing. That's interesting. Lower prices for construction equipment. I believe that is your slowdown in Chinese construction showing right there. Lower demand mainly reflected changes in dealer inventories, but it's the outlook that the market is focusing on here. Caterpillar offered two scenarios. With no impact from tariffs, it said full year sales should be about flat versus 2024, which was better than January's outlook for a slight decline. However, if tariffs stay at April 29th levels, sales should still match January's guidance. So Caterpillar is saying here that the impact from the tariffs is going to be slight, if any. And the market was pricing in kind of a disaster for tariffs for Caterpillar because they do a lot of business in China. And so with less of a tariff impact, Cat stock is actually up, even though they just posted abysmal earnings. I mean, minus 24% year over year earnings. Dreadful numbers from Cat, but the stock is higher by 1.7%, trading at $311.47. Meanwhile, we got Yum Brands revenue misses as Pizza Hut's same-store sales fall about 2%. Look, we won't spend too much time on this one, but Yum Brands, they own KFC, Pizza Hut, Taco Bell. And the numbers in particular, the U.S. numbers were pretty weak here. I'm not going to lie. This didn't look really good. This is the struggling U.S. consumer. He's eating out less. He's getting less fast food. Maybe the GLP-1s and Ozempic effect are also affecting this a little bit. A lot of people are taking those shots to lose weight, and they're eating less junk food because of it. Maybe that's playing a role here, but the restaurant business continues to struggle. Yum Brand stock, actually, let's refresh, make sure we got accurate info here. Yum Brand stock is up 1%, though. So a little bit of a silver lining, maybe. Well, no, it's up 11% year to date. Okay, this one defying gravity this morning. Yum is looking pretty good. Let's talk about the auto industry now, because we got two big ones in the auto industry here. Auto giant Stellantis suspends full year guidance due to uncertainties over tariffs. We're seeing a lot of people are doing that, and Stellantis' numbers were pretty bad too. Stellantis on Wednesday said it was withdrawing its full year financial guidance due to uncertainties regarding the impact of U.S. President Trump's back and forth trade policy. The multinational conglomerate, which owns household names including Jeep, Dodge, Fiat, Chrysler, and Peugeot, reported first quarter net revenues of 35.8 billion euros, reflecting a 14% drop from the previous year. Big drop in revenue. All right, the car industry is hurting. People can't afford cars. I mean, it's a fact of the matter. New cars have gotten insanely expensive while wages have been stagnant. The company said the decline in net revenues was primarily due to lower shipment volumes. We're making less money because we sold fewer cars. Nice analysis there. Now, here's the thing, the tariff thing. This is a big effect for the car industry. The U.S. president on Tuesday signed an executive order to water down some auto tariffs. Tariffs of 25% on imported vehicles into the U.S. will continue, but the new measures aim to reduce the overall level of duties on vehicle imports that had resulted from separate levies, such as an additional 25% tariff on steel and aluminum. They're trying to avoid stacking tariffs one on top of another. Under the latest White House order, additional 25% tariffs on auto parts that were set to start by May 3rd will also still take effect, but vehicles that go through final assembly in the U.S. will be able to qualify for partial reimbursement on those levies for 2 years. All right, so this is kind of a rollback. Yeah, you had the steel and aluminum. That doesn't apply to autos. the parts tariffs is big. If you assemble your cars in the States, but you buy your parts from overseas, we'll give you some relief on those parts tariffs, but only for 2 years. After 2 years, those tariffs are coming back on top of everything else. So you better start making your parts in the U.S. So again, this is a little bit of a rollback on the tariffs. This is giving the market a little bit of what it wanted. But Stellantis, not enough to help this stock. It's currently down 3.2%, $9.28 for shares of Stellantis. And we got the same thing from Volkswagen, a 37% drop in first quarter profit. And they're saying, of course, that the tariffs could weigh on their outlook as well. Same story as Stellantis, guys. The auto industry already was in trouble. 30% drop in first quarter profits. That was before the tariffs. All right. And now they're saying the tariffs could make things worse. Volkswagen stock was down 2%, 2.1% on that news yesterday. The auto industry, guys, there's a reckoning coming. And yet it still looks like auto prices going higher from here. Tough time to be building cars. I just want to say thank you so much to my man, the Mish, the legend. Mish gifted 5 Nobody Special Finance memberships. Thank you so much, brother, for everything you do for the channel, both as a moderator, as a research assistant, and for supporting the channel with the 5 new memberships. Guys, if you got one of those memberships, say thank you to Mish in the comments. And while you're at it, say thank you to Viv B, also who gifted 5 memberships. So welcome to you 10 new melon heads. May your wildest dreams come true. Don't forget to use that super chat feature. You get one a month. If you're a Melonhead member, feel free to use that, guys, and I will read and respond to your questions on the air. Thanks again, Mish and Viv B, for supporting the channel. And my buddy, the Pasta Man, is back. He says, delisting SMCI. No, we are selling stock. Oh, here we go. Channeling John Told to willing buyers at fair market prices. Rakesh, is it legal? I don't know. My John Told is terrible. Jeremy Irons has a very distinct voice. I got to work on that. All right. I apologize. I rescind my Jeremy Irons. I can do better. I'll work on that. That's hard. I had no time to practice that either. FYI, China issue is really about stealing U.S. IP and recourse. And of course, you got Forrest Gump saying, but you ain't got no recourse, Lieutenant Dan. That's right. China can take your IP, and there is diddly squat you can do about it. Something Kevin O'Leary, I'm not exactly the president of his fan club because FTX, but Kevin O'Leary has been a very vocal critic of China and the IP theft issue. They take what they want, period. That's what they do. All right. Anybody else does that, they end up in court, sued, put out of business. But China just takes it. And everybody's like, oh, my God, Orange Man bad. Let's not forget the Chinese knockoffs of crap. Just walk through freaking Chinatown and look, there is fake Chinese crap imitating American brands all over the place. You buy? Handbag. Yeah, I agree. That's a big issue, intellectual property theft. And I don't think the Chinese are going to do anything about it. I really don't. Let's say we cut some big deal. They'll make a promise. Oh, yeah, we're going to fix the IP theft issue. No problem. They won't do a damn thing about it. I really think the trade war, it's more about isolating China. And I also think the trade war is more about waging war against our own companies who don't want to hire us. I think the war is more between the American middle class, what is left of the American middle class, and the American multinational conglomerates that don't want to hire them. I think that's the big fight here. The Chinese are not going to give us what we want. The Chinese take what they want, period, end of story. So, and right now, look, American companies are fighting back. American companies do not want to hire us. All right. Amazon with their tariff listings, they're itemizing tariff charges for political reasons. Microsoft out with a story today saying we're not going to roll back any data center plans. And if they try to order us to, we're going to fight back. American companies siding with foreign countries, foreign governments against the United States because Orange Man bad? No, because they really don't want to spend their money here. They don't want to hire us. It's too expensive for them. And the tariffs is about forcing them to do so. It's clumsy. Is it right? Probably not. It's also the biggest tax increase in U.S. history, these tariffs. I think that's kind of getting lost on a lot of the people on the right who are supposedly anti-tax. Let's remember, guys, this is an increase of taxes that we will pay. All right. Talking points about, the Chinese are going to pay for it. No, they're not. All right. Eventually, they might lose market share because of it, but we're going to pay for it. By the way, Congress, WTF are you guys doing? This big tax increase on tariffs, you can offset that by lowering our income taxes. You haven't done a damn thing about it. What are you guys doing? It's been 100 days. Where are you? Lower the freaking income taxes, and then maybe the tariffs won't hurt as much. But then again, Congress, I'm not sure they want us to win the trade war. All right? And by the way, American left, what the hell happened to the American left? Remember when the American left used to be all about reshoring manufacturing? Remember when the American left used to be all about hiring Americans and those greedy corporations that outsourced all of our jobs, punish them? Well, they were all for a trade war right up until Donald Trump was for it, weren't they? It seems like their principles don't matter nearly as much as just being on the opposite side of whatever argument as Donald Trump. That seems to be the higher priority. You could say we're going about it clumsy. You could say we're doing it wrong. You could say the rollout of the tariffs was too much too fast. And I agree with you. But the fact of the matter is, this trade war has started. We are in it. Get off your ass and fight it or surrender. Fighting half-assed does not work. Anyway, thank you, Pasta Man. Man, you really sent me on a tangent there. Sorry. Krusty White Bread, what's going on, brother? He says, thank you to whoever renewed my membership yesterday. Well, you are most welcome, whoever that was. And we've had a couple people gifting memberships, but thank you, Krusty White Bread, for being a member and for following the channel for this time. I appreciate that very much. Pigo's Trading Desk says, Madam Yellen forgives you on SMCI. Well, I just want to say that Supermicro Computer is my personal favorite. I think Charles Lang is an upstanding individual, and I'm personally willing to forgive him for that other fraud that they had to settle with the SEC for. It was just a distant history. I mean, it was almost 4 years ago that SMCI was relisted for the last time they did accounting fraud. And well, I'm an accounting fraud myself, and so I love companies that commit accounting fraud. Well, thank you, Secretary Yellen, for weighing in on Supermicro Computer. I am not the least bit surprised that you like Supermicro Computer. As it is often said, birds of the same feather and such. Thank you, Pigo, for queuing up the Janet, and thank you for supporting the channel, brother. Hunt and Cover says, like Jack, not AI, still friends. I like Jack. I don't like AI, still friends. Okay. Well, we're still going to be friends, Hunt and Cover. That's the important thing. All right. Wow. Are you breaking up with me, Hunt and Cover? Was it something I said? I can change. Thanks, Hunt and Cover, for supporting the channel for 14 months as a Melonhead. OG Melonhead right there, Hunt and Cover. Thank you guys for having your coffee with the Melonheads this morning. Don't forget that like button and that subscribe button on the way out for the algo, should you feel so inclined. Thank you, everybody, for the super chats and for your generosity. I appreciate that, as well as you, my magnanimous Melonheads on YouTube and Patreon. Thank you guys for everything you do for the channel. Links down below, should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Everybody else, till next time, live small and dream big.